And now, live in studio, cutting through your typical media nonsense and offering you a rational and unbiased perspective on current events and life in Tampa Bay. He's a successful entrepreneur, a real estate and finance expert, and goes to bat for you every day as your consumer advocate. Your host, Brandon Rhymes.
Yes, here we are again, another day committed to picking a fight with the mainstream media and providing you the timely truth centered around your real estate, credit, finance, estate planning, tax planning, business financing, and so much more. You're listening to the Real Estate Quarterback Show, with our number one goals being to educate, enlighten, engage in an effort to help you win in any marketplace.
The only thing I'm addicted to right now is winning.
Now, I want you to pull out your smartphone and save our consumer advocate hotline number in your phone. It's 813-917-1894.
You used to call me on my cell phone.
813-917-1894. And we want you to bookmark realestateradiottampa.com. Realestateradiottampa.com. That's our blog site, website, where you can see listings from Platinum MVP Realty. You can also click on the Expert Contributors tab and see all of our expert contributors, over 75 show partners now associated with the Real Estate Quarterback Show, and our second brand called the Consumer Quarterback Show, which is more lifestyle-related, recreation, and nutrition, health, and wealth. So let's go around the horn. Let's make our introductions. We got some new partners here. Thanks for being a partner of the show here. We got Naim with Snyergistic Funding. Welcome in, sir.
Thank you, sir.
And also we have Keyur as well with Snyergistic Funding.
Thanks for having us.
What are we going to talk about today? Give us a little tease.
So we're going to tell you how we got into this business. Snyergistic Funding is a fairly new company, but our management team has been around for a very long time. Mm-hmm. Very long time, meaning 2006.
Nice. Okay.
So we launched credit card processing back in 2006.
Yep.
And have grown that into a pretty substantial company. Actually, our sister company, Card Connect, is going public this coming June.
Awesome.
So we own a Tampa office for Card Connect. We've serviced clients all over the U.S., but the concentration of our portfolio is focused here in Tampa Bay. And part of our commitment to our customers was customer service, obviously. Within the area of financing, when you talk to a customer about financing, they think you're an expert in all sorts of financial products. So they come to you, once they have a good relationship with you, they come to you for so many other things that you have no clue about. Yep. And one of the things that they always came to us for was financing. You know, every business, cash flow is king when it comes to business, and they all need money.
Absolutely. It's very important.
So what we began to realize is that this was a growing demand within our book of business. Yep. So we established relationships with bankers all over the Tampa Bay area and began to send them business.
Nice.
Now, as you know, back in the good days, about 30% of those clients would get the funding that they needed to grow their business. Yep. And that was pretty good statistics. Yep. After the credit crunch came, that dwindled down to about 2 out of every 20.
Yep.
So we're looking at horrible ratios. So we thought to ourselves, there's got to be a better way to do this. And we actually did a full year of research in order to identify alternative lending solutions. And what we uncovered was there's all of these products that you didn't know about, or that we sort of knew about, but we didn't know how detailed it could be.
Right.
And all of these products were not offered by banks. So you can get very creative in the way that you lend money to clients without having to go through all the restrictions that banks put you through, because they're decent businesses. They got the cash flows, they got assets that they can leverage, but unfortunately they had a bankruptcy. Or unfortunately they had that short sale that caused them to have bad credit.
Yep.
Or they had that year where they didn't do so well, so they were behind on their bills.
Yep.
Bank can't do anything for you when it comes to that. Alternative lenders will.
Wow.
And that's the biggest distinction.
Yeah, that's awesome. If you just joined us, you're listening to the Real Estate Quarterback Show. It's Naim with Snyergistic Funding, and also going to hear from Keyur as well. And we also have Curt Lorden, branch manager at Interlinc Mortgage here in Tampa Bay. Welcome in, sir.
Thank you very much. And by the way, for all of you guys out there listening, Ray just walked in. Apparently,
Ray
I made some sort of wish, and it came true.
It did. He had some car trouble today. That's right.
And it shouldn't be. It's a brand new car. I'm like saying, how I get a flat tire?
Well, brand new car, but old tires.
yeah, exactly. But we were just talking about the health team, man. Awesome food you bring in for us. We appreciate that. And
I got extra stuff for y'all, so.
Excellent. Excellent. Yeah, great. Hey, this is going to be a great show here. I love this conversation because what happened, we all heard about the meltdown. We see things happening, and frankly, it pisses me off when I see, a lot of times these banks hoarding their reserves of our money, taxpayer money, that they're not lending in many cases, and some of these loans really make sense. And, when you're talking about a bank statement program where you can see the deposits coming into the bank, and then you can kind of get a P&L and see what they're looking to pay wise. But let's talk a bit about that, because I know there's a lot of small business owners. Everything, I love the small businesses here in Tampa Bay. Growing up, my parents, uncles, everybody in the family was self-employed, so they make it hard in many cases. And these politicians and the lobbyists, and it's probably one of the reasons why Congress has a 12% approval rating. So let's talk more about that, Naim. With the small business, how can they get in contact with you? How can they, sit down, come in and talk about their business, right?
Well, typically what we used to do, like I said before, is we would go to banks and refer them the business.
Yep.
So what we ended up doing was going to the banks that we had relationships with and said, hey, listen, you're rejecting all of this business. Where are you sending this?
Yes.
Right? Are you allowing your competition to maybe get those deposits? Because not only are you not lending to them, but now you're going to lose their deposits.
Great point.
Right? So send us that business and let us work on getting them the funding that they need and look like the hero.
That's right.
So we actually went back to the banks and got them to begin to send us business, and that's how we started.
Yeah, that's
right?
Awesome. That's a great way to do it, because when there's a need, and that's what, on a macro level here with the show, that's what we've done is we have, over 75 partners now. We want to be that turnkey solution. We want to quarterback these introductions to all of our partners. So it makes sense. You go into the bank, you say, hey, instead of just turning them down flat, why not refer them to us?
Right. And just to mention, Curt and I went to college together and we're fraternity brothers.
Yeah.
Cool, man.
So I walked in here and I was like deer in a headlight.
Did not expect to see me.
Yeah, that's cool, man. So, a lot of times too, when I'm talking to, I'm looking at listings, I'm looking at, potential buyers that I'm talking to and trying to pre-qualify these buyers. Curt does an awesome job with, as a branch manager at Interlinc Mortgage, got a great team over there. And I love supporting local businesses. You mentioned that at the first, local businesses is what's going to donate monies back to our charities. They're going to help our children, these local companies. And, why support the big bank on the corner? You know who they are. Those are the guys that took the bailout money and they're hoarding their cash and they're giving their CEOs those corporate bonuses and all that cool stuff, the golden parachutes on their way out. So support local companies. What do you say about that, Curt?
Yeah, I mean, you have to. You go to like one of the largest corporations, you're going to use them as their business. You're paying for the corporate trips, this, that, and the other. You go to a local business, you're paying for their daughter's college fund.
Yep.
It makes perfect sense. What Naim was saying is what they do is they do common sense lending. That's what we used to do a while ago until that nasty word greed got involved, and
sure.
They just took it to a whole nother level and started destroying families and the entire fabric of our economy, which we're still struggling now, even with what the Fed said the other or last week. So kudos to you guys for actually doing it the right way and looking at it the way we used to look at it and say this makes sense. This is a good borrower. Yeah, they have some dings and dents, but they are still lendable individuals.
Yeah, and just to mention, one of the things that we do when we see that a borrower, you can always get the best type of lending when you go directly to the bank.
Yeah.
Okay, hands down.
Yeah.
Okay, just being straightforward, honest with everybody here.
So let's go ahead and bring Keyur into the conversation here, Snyergistic Funding. So what's your capacity over there? What are you focused on?
So basically, I'm kind of involved in all the elements of the business. What we do is, from the intake form itself, from a client perspective, kind of dive in deep into their specific situation and figure out what type of challenges they're running into, and then partnering them up with the right funding solution. To the Fed's point, when you're talking about rates, in the alternative space, yeah, there's some relevance in some of that, but there's also a big distinction between what these lenders can justify charging, and it's really not even comparable to anything, what prime rates are or anything like that. They're going to basically assess the risk and then come out with their own essential rate on that.
Right.
It's usually not tied, to LIBOR or anything like that.
Right.
It's just, hey, this is what we're willing to do.
Yep.
And that's kind of where synergistic funding is different as well, because yes, we have the outlays to take you to some of these lenders that may give you a deal when no one else will. But is that really going to make business sense for you? And is it going to get you in more trouble, or is it really the right solution?
Yeah.
So that's kind of what we do. We go a step deeper and say, okay, we know we can secure the funding for you from X, but based on your cash flows or your specific scenario, we might need to puzzle piece this thing together, take a little bit in the form of a line of credit, and maybe a lump sum here, and it's all case by case. But just because we have the solutions that might be viable for someone, it really may not when you really dig in deeper. So my job is really just to find and make sure that we're giving and offering the right solution.
Right. Yeah, I love that. It's a comprehensive approach. We highly encourage that. You're going to bring in your financial advisor into the conversation. You're going to bring your accountant into the conversation, your mortgage lender. Absolutely. I mean, there's so many pieces of that puzzle to look at. We've got 7 or 8 different types of attorneys that are associated with this show. So whatever you need, we want to be that turnkey resource for you. So, yeah, it's interesting. And before the show, we were talking. Go ahead.
Yeah, and to mention, the way that we designed this company, it was based on our credit card processing company. So we designed these types of these different types of loans in order to fit their needs.
Yep.
Right. So we did this by design.
Right.
So having all of these loan options isn't something easy, right? Because it takes a lot of logistics in order, different applications, different information that you need, but it is the right solution for companies. A lot of alternative lenders out there, offer one product,
right?
And whether it makes sense for you or not, they're going to push you into that product.
Yeah,
and that's
commission-based advice.
Exactly. And that's the biggest distinction between alternative lending and synergistic funding.
Yeah, I love it. And that's one of the things I'm reading the show notes here. You act in a broker capacity, so that's great. You're able to shop X amount of investors, find the right program for that small business. By the way, if you just joined us, you're listening to the Real Estate Quarterback Show. I'm your host here, Brandon Rhymes. We got Curt Lorden in studio. We got Naim and Keyur with Synergistic Funding, talking about small business loans, some options, things out there to potentially improve efficiencies with your business and help you get that cash that you need. So what else are you seeing out there?
So, we're a lot of businesses that are growing. Tampa in general, Tampa Bay, both on the residential side and the commercial space, has been pretty much booming when you compare us to a lot of the tiers that we're in. So your Phoenixes, your Charlottes, and obviously we can get into some areas that we might be lacking from a transport side of things, but from the business side of things, I think there's a lot more people are still continuously moving in.
Sure.
We have a lot of good businesses that might be in their first, second year and they're turning profits, but they're still not quote unquote bankable because the banks don't want to even look at them until they have 3 years of solid financials or basically a clean slate.
Yep.
And that's the issue that a lot of these guys are running into, and that's kind of the void or niche that we're filling.
Yep.
Because we give them the right solution to kind of keep pace with their growth. Not too much, I can't tell you how many times people come to us and say, okay, I need $100,000. Well, when we really dig in and say, well, where's this $100,000 going?
Right.
50% of it or 50,000 might not be for another quarter or 2 quarters down the line.
Yeah.
So why take on this debt and pay for something that you're not even going to be using, for quite some time?
Because you're going to look at the cost of funds.
Yep.
You're going to factor that into your business model and understand, hey, when do I need to apply this? There's probably some companies that you see that have a high volume of receivables.
Yep.
There might be other options with potentially factoring or things
Absolutely.
like that. That you can look at that makes more sense. Maybe lower rate because it's secured. There's ways to look at each business decision, and we want to help you make you more street smart here with the Real Estate Quarterback Show. Kind of give you that helicopter view of the marketplace. And Curt, what do you see on the residential side, man?
Well, I mean, we still have you were saying earlier, our inventory is still low. Up north in Lutz and Wesley Chapel, there's a lot of new builders that are pulling permit after permit after permit to create this inventory because sellers still are not willing to make that move. And I go back to the importance of dealing with a great listing agent to be able to list your house at the right price, or at least talk to you about where you need to be. And that listing agent should actually team up with a mortgage consultant. That way you can find out what that bottom line that seller needs to make, and then have that negotiate if the seller pay closing costs or not to make sure that they hit their bottom line. And that's something that a lot of listing agents don't do. They don't partner up with the lender because they don't think they need one.
Yeah, exactly. It's so important when you look at the residential side of lending. There's so many plays that you can make that makes, it's where the smart money, where's the smart money at? As housing starts, constructions are up, the apartment complex market is so hot. Some say it's overinflated, which, possibly I agree in some cases. So there's a lot of considerations. There's a lot of things you look at, and one of the ideas that I like is taking, that money. Maybe you're potentially just rolling it over into your 401k, making stock market, chasing stocks. That's not the way to go. What you want to do right now is play that money into a duplex, triplex, quad, some type of an investment property, because as we mentioned before, so many people got displaced from their homes through this crisis. There's loan modifications, short sales, bankruptcies, at record highs. There's so many people that are forced into renting right now.
There are, and I think a lot of them are sitting there scared, and they don't realize that they actually can get back into the purchase game.
Right.
Right now, it is so cheap to buy a home. I mean, you have the Florida bond program, which never runs out of money. It's down payment assistance. You get $15,000 towards closing costs, this, that, and the other. And if you quantify it and say, okay, if I rent an apartment, I have first month's, last month. If I have a pet, I have a pet deposit, probably a security deposit, and an application. There's your closing cost for a $150,000 home.
Yeah. And you can't throw the cool parties.
Exactly. Exactly.
Have you ever done like the statistics to show like a percent in interest? Like if you go from 5% to 6%, how much more of a house you can buy?
You mean as far as the interest rate?
Interest rate, right.
Yeah. Oh, yeah, absolutely. I haven't ran the statistics, but I sit down with all of my clients and say, look, this is because the big thing is a lot of clients don't want to bring money out of pocket, so they may opt for a little bit of a higher interest rate to pay less out of pocket for closing costs.
Yeah.
So, and really, depending on the loan amount, you're looking at maybe a $15, $20 difference in payment. So it really is, that would be it would be less to go from a 5 to 6% than it would be to go from 2015 to 2016 in your apartment, because your rent's going to go up more than that.
So what else are you seeing out there?
I mean, there's a lot. A lot of people may qualify for things that they may not need. Back to Keyur's point.
Yep.
And they'll go ahead and take everything. We were approved for $100,000. Okay, great. Give me all 100.
Yeah.
And then they'll start spending it on really dumb things.
Right.
Things that they really don't need to be spending their money on.
When you see them spending, I mean, it's not wise to go out and just and start spending money on marketing, buying stall mall ads in the bathroom.
Right. So one of the things that is super important nowadays is the millennials, right? Understanding the millennials is huge.
Yep.
Millennials are all about local. They're all about the right type of advertising. And if you're not capitalizing on that, you're missing out on a big segment of our economy.
Let's go around the horn here and get some more tips from our partners. So, Keyur, between the break, you were talking about ballooning notes and arms.
Yeah, I mean, in the commercial space, a lot of notes or a lot of commercial mortgages were written in the height of before the recession essentially started, and a lot of those are coming due. And the existing note holders, these banks that put these loans out, really have no interest in refinancing these or extending these out.
Right.
So there's a lot of opportunity for the clients from a client standpoint. These are ballooning notes that are coming due, and you need to start planning for them, preparing what your exit strategy or refinance strategy is going to be.
Yep.
And from an investor standpoint, there's a lot of opportunities that I think are going to be coming up here in the next couple of years. Between now and 2017, it's estimated to be, from a nationwide standpoint, $2 trillion or so coming due in commercial notes.
Wow.
Segmented down here in the South region, I'd say Georgia and Florida. I mean, it's hundreds and hundreds of millions of dollars.
Yeah, it's a major concern that you have as a business owner. If you've got that, kind of looming over your head, you're not going to be able to focus on your business very well.
Nope.
So we want you reaching out to our partners here. Reminder, go to realestateradiotampa.com, click on the executive or the expert contributors tab, rather, and you can reach any of our partners through that. So, Curt, what else are you seeing out there, man?
Well, kind of going off what you're saying as far as, these ballooning notes and et cetera, adjustable rates. This is why I go back to the fact that you should have a yearly financial checkup. You should have someone that you trust that maybe did the purchase, did the refinance, did, the small business loan, and go through these documents on a yearly basis and kind of project where you need to be. Because as a consumer out there, you're reading this balloon note and it literally it reads like Chinese. You just don't know.
Yep.
You don't understand it. To have a professional say, okay, listen, Naim, you want to do this in the next 18 months, so go ahead and prepare yourself, financially to make this move, and we'll start working on it. So again, align yourself with people that you trust that have your best interest, in mind and have that yearly checkup, because we all go to the doctor once a year. Why don't we go to our financial experts?
Yeah, and to mention that, a lot of people wait till the very last minute, and even at that point, even we can't help you.
Yeah,
right. We move very quickly, but even if you wait till the last minute, we can't help you.
Right.
We had several.
Talking about getting stressed out.
We had several clients, that were sitting on properties where they had like 30% in loan to value, and they lost those properties.
Wow.
So it's.
So wait a second, were they 70% LTV?
70%. Correct.
Wow.
Correct.
So you had 30% equity sitting there, but they just didn't act. And they were just despairing, denying. They didn't know what to do.
I'll tell you the recap without disclosing the parties, but basically it's a large shopping center, mixed use center. The guy built it during the downturn, so from cost of construction perspective, everything was upside down. We brought him a couple deals that he should have taken. Ultimately, the ball was in his court. He didn't execute, and now he's facing bankruptcy.
Wow.
I mean, we felt so guilty for this guy that he was so behind. We put some of our own money to help him just get through the application process.
Right.
And then at the end, he didn't capitalize on it. We lost our money, and then he ended up losing his property.
Yeah.
And it's sad when you see things like that.
Did he have a lot of other assets, though?
He has some, but they're all encumbered, and I mean, there's no leverage. I mean,
so it's encumbered.
We were doing it we were basically. I mean, it was a strong project as his values were substantial. This was an income producing property at the time. He needed the money to kind of take out the bad debt and build out and finish the project. And we secured that for him.
Wow.
And he wanted different terms and all these things, and then thought he could find it, didn't find it, and now he's in bankruptcy. So.
Yeah, sometimes you got to call an audible.
Exactly.
Instead of going with that same old flow, people they just don't understand. There's options out there for you. As a consumer advocate here in Tampa Bay, we take great pride in helping you win in any marketplace. That's the goal of our show and has been for 3 years. Curt, why don't we do a rent versus own analysis for our listeners? You want to do that on the renter side?
Yeah, absolutely.
The rent versus own analysis, what we're going to do is we're going to take the amount of money that you're throwing away in rent, paying your landlord's mortgage, and we're going to put together a spreadsheet. Curt and his team over at Interlinc Mortgage will put together a spreadsheet, and you'll see the numbers plain and simple. Right and left here, it's going to have on the left-hand side, it's going to be the amount of money that you're paying in your rent versus the amount of money that you could be applying to a mortgage payment, building up equity in that property. Each month that goes by, you're going to be paying down that mortgage debt. You're going to be appreciating in your property values, and it's an opportunity for you to take an action item. Leave a better legacy for your family. Let's get into homeownership now, and let's do that for the first 5 listeners. We'll do a rent versus own analysis, and so go ahead and text the word rent and the amount of rent that you're paying, and we're going to have Curt and his team put together a rent versus own analysis. Break down these numbers for you. Let you see how you can get away from your landlord. You can have this opportunity to build up legacy, build up equity, and that difference is cash. That's liquidity that you have, and you can access it like cash through a home equity line. But it's a great play right now.
It is, and one of the things we talk about is appreciating asset. Let's say worst case scenario that it depreciates. The one good thing is that your mortgage payment is not going to change, so you're still going to be paying down that asset, whereas your rent is always going to go up. Your landlord's not going to say, "Hey, Naim, I'm just going to cut you a deal and pay you $100 less for rent." He's just not going to do it. So it doesn't matter up or down. It's still a fantastic investment right now.
And Curt, you mentioned earlier, and you made a very good point. A lot of people think they don't have the money that they need to put down on a house. Go through that, because that was a very good point.
Yeah, people look at what they have in their bank account and they're like, I don't really want to take this out. But you look at the different avenues. One, it can be a gift from a family member or something like that, or it could be your tax refund. It could be down payment assistance through Florida bonds. You have all of these different avenues. It's just no one seems to ask the question. It's like they're afraid to say, "Brandon, can I buy a house?" They just kind of sit back and say, I don't really know what to do. Yeah. You're not supposed to know what you do. Yeah. You're supposed to know what to do. You're not a mortgage consultant.
There's a lot of assumption.
Exactly. It's like I couldn't change brakes if someone paid me. I've taken my car to get them taken, but I can't change it. Yeah. Some people can't cook.
Yeah, exactly.
So, we're not expecting you to know everything. That's why we're here.
Yeah, we want you to focus on being a great doctor, engineer, You might be a construction worker, whatever you do during the day. That's your specialty. We want to handle these big ticket items, help you live a better life. Be that consumer advocate that's going to be able to quarterback these introductions to all of our partners. Again, over 75 show partners now with the Real Estate Quarterback Show and the Consumer Quarterback Show. And we just want to help you live a better life. And you got to reach out though. We have a QAA formula with this show. As listeners, you're going to have questions. We're going to provide answers, but we want to take it a step further. We want to give you these action items to help you live a better life, and that's when we do the text offers. There's things we can do to help you there as well. So we got about a minute left. And parting words of advice, Naim?
Yeah, another word of advice. A lot of people want to get into commercial property or they want to make an investment into a business, but they have zero cash to do it. Yep. So if you have zero cash to do something, then good chances you should not do it.
Right.
Right.
Focus on cash flow.
In the same way that people want to buy a house,
right.
if you have high credit card bills, you don't have any cash up front, so how are you going to buy this house?
Yeah.
And we get a lot of those situations, and so get your financials in order when you come to talk to somebody like this, because we can help you, but we can't just do magic.
Right. Exactly.
40 seconds left, Keyur.
Yeah, I mean, I think to that point, we get people that say, "Oh, I found this property, it's got equity, sounds like a great deal," or I've been renting, I've been leasing this space, and now I want to buy the building from my landlord, but I don't have, so how much do you have liquidity to put down? You don't have anything, so you can't, we can help, but we can't do magic. It's just plain and simple, common sense to some extent.
Yeah,
I think that's why we have a magician show partner.
William Crowley,
the credit
AKA.
magician.
Does he create money?
He can help you through your improving of credit scores to help you. And I want to thank the guys from Snyergistic Funding here coming in, being a partner of the show. I want to thank Curt Lorden, filling in as co-host for the day here with Interlinc Mortgage, and remind you about our party coming up the 21st, pool party over at Hula Bay. It's our official restaurant partner, and go ahead and say hello to Mike Finnegan. He's the manager over there, and Todd as well, and let him know the Real Estate Quarterback sent you for a free glass of water with lemon, and we want you to go out and live a better life, and please consider making a random act of kindness in your daily walks that you have daily. Go out there and help someone, smile at someone, help them live a better life, and turn them on to the show. We appreciate it. Check us out on Instagram, Facebook's, YouTube videos, a lot of cool videos out there. So we'll see you next time. RealEstateRadioTampa.com.